cars. We're bringing it home now and talking about Metair, which is an interesting company. It's a manufacturer and supplier of vehicle components, both for the original equipment manufacturers here in South Africa in terms of the motor industry development plan, as well as in the aftermarket. That's, sales of things that are used by cars in a second-hand or replacement part situation. Not just an operator here in South Africa, they've also expanded into Eastern Europe and to Turkey, interestingly. And it has a particular focus on batteries, particularly those batteries that are used in these stop-start cars that turn themselves off when they approach a traffic light. Market capitalization 6.92 billion rand, price earnings ratio of 11 and a dividend yield of around 2.4%. Funny little industry, the South African motor industry. Historically, they wanted cars made here, so they made all sorts of rules and export benefits and what have you. But it's been beneficial for this company, which had a close working relationship with Toyota and so on and so forth in the past. Nice, solid operator, not very high profile, but makes some good products.
Oh, you don't hear about it often, but very cash generative and it has up until now been very conservatively run. I mean, they've gone through a period of transition where they have, you mentioned they bought the Turkish operations as well, but they've been trying to buy a lot of businesses offshore, and I think their mix is now about 38% offshore. So it also gives it a nice rand hedge component for guys looking to add it to a portfolio.
So locally, the brands are things like Hella, which people will be familiar with. I think those are the lights, lots of wiper blades, filters, all of that sort of thing. But internationally, Rombat was the Romanian battery manufacturer, and then Mutlu Aku was the business that they bought out in Turkey, which has got quite a sizable manufacturing facility, and being close to Europe benefits from all sorts of trade relationships. Okay, so I mean, we own some of these in our hot stocks portfolio, and the reason was that we figured that maybe the Mutlu Aku asset would be attractive, and that people wouldn't realize, as they sometimes don't, that something new has been added and that it was bought at a good price. Therefore, the results which are going to be for the period end of June might be stronger than expected. I don't know, does that sound convincing?
I still think it is convincing, and I mean, if you listen to their management as well, they're going on an acquisition drive at the moment. They say it takes a long time, especially in this industry, to almost get market dominance. Like they're quoted 70, 80 years. So they, in new markets, they're trying to do large acquisitions, and I mean, they're trying to ramp up their battery production. I think it's from 10 million to 50 million. So it's acquisitive, and it's going to grow. So I think you might see a little bit more headlines coming around it, and I would be excited about it. I mean, we don't hold it in our emerging portfolio anymore, but we have held it. I mean, we think fundamentally it's a good company.
Okay, so we're going hot on this one. We're running short of time, but I like the story. That's why we bought it. Seems to make sense.